The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday on market days. And what is really important about this is it is the middle of the week. It isn't exactly yet the middle. Another couple of hours, it'll be the middle of the week. And so far this week, we've got some downside surprises. And just as everyone is getting really bearish, it would not surprise me if there's some counter trend bounce, just a bounce, but a bounce to make everyone say, oh man, we just got short this morning and now look what's happening. We'll see what happens. Anyway, so most importantly, let's just run the numbers. The E-minis are now down only 25. They unch. And in fact, another second and they're going to go positive for the first time. So this is very important. Why? Because when I showed my subscribers to my opening call this morning, every single morning I show them the daily and the weekly, the daily and the 120-minute chart of the E-minis. I do not give I do not give positions. There's just enough that I do. It would be almost like a separate service if I did that. But what I do show is exactly what I'm looking at for support levels, resistance levels, whether we've made an important peak, whether or not there's a downtrend unfolding or an uptrend, and which time frame. And what I said was that the 1846 level of the 200-period exponential moving average will become a target if the June E-mini S&P breaks 1851. Well, the low this morning is 1846.75. Not bad for a 200-period exponential moving average. That wasn't really the issue. The issue was I'd already drawn in a left side, right side price time, which I believe I'd already done it yesterday, to show, can't remember if I did it yesterday or last night, to show that there's a left side, right side price time match to that 1846 level, and that comes in at exactly 10 o'clock on the 12th of March. What is today? The 12th of March. What time was the low made? Right there on that candle, on the 10 o'clock candle. And now we're rallying. We've gone above the 9-period exponential moving average. That's a very sharp gain. It's 11 points. Let's call it 10, 11 points off the low. And I believe that that is the reason why I'm always determined when I'm making my calls for my subscribers to go step by step. I do not like to say, "Oh, we're breaking down," and if the E-mini is in a downturn, we'll be going down to the 1820 or the 1760 or the 1730 200-period moving average in the daily. I just cannot do that. I have to go step by step. I have to wait for certain things to happen. I have to wait. Even now, the MACD is not crossed negative. Even now, the E-mini has not closed under the 9-period exponential moving average because it's a daily chart. Even now, the stochastic is at 79.83, real close to the 80% level. I have to wait for a whole bunch of configurations to unfold before I'm able to get a down arrow to say that that is not just a sell signal, but a sell mode. They sometimes come together. And that just says that at that particular point, you've got a sell mode. It doesn't mean to say the next day you couldn't get a turnaround. After all, we are merely following the chart formation. That's all. So let me just run the numbers, make it a little easier. The Dow's down 21 at 16,329. The S&P is down 2.25 at 1865. The comp index is up 5 at 4312. Nice divergence there. I actually would like a little bit of a rally here because there's certain positions that we'd like to take, and we need a bounce to be able to take them. And as I say, last week was the first time that we started to go heavily to the short side. This is very unusual for us. In my opening call, we've been bulls for a long time with very brief encounters with short side. and one of the sectors that we are short, there's a tremendous, one of the deepest pullbacks yet. But, you know, the day is young. Anything can happen. So with that in mind, let me go on. You've got, now this is to me very important, the GCM 14, that's the gold contract. And I'll do a little bit more of this in the next hour because I'll be doing Larry's show, and Larry likes to also focus on the different commodities, and that's straight what you see. While Larry's out, I'll do my very best to be able to fill in on those hours, and if I'll be able to do it all the time, but we'll try. Before I go on, great workshop last night that Tom and David gave on the art of timing the charts. This is the software that goes with that, showing you all those different garters and butterflies, etc. A really fabulous piece of software. I had mentioned it yesterday. Check out the front page of TFNN. But now, if you go to the front page of TFNN, there's another little surprise. I've decided for my subscribers, although a couple of years ago I did a whole webinar on this, an evening webinar of quite a few hours, I'm going to be doing for my opening call subscribers. That's my daily news service. So subscribers to the opening call will get a free webinar by me, Basil Chapman, and I'll be teaching how to use the MACD, the moving average, convergence, divergence, and the slow stochastic. And it'll be, let me just double check that we've all got the right times here, because sometimes I get a little ahead. Yeah, this is going to be, let's see, did we put a date? Yeah, we did. Sign up now and get access to Basil's subscriber-only webinar on March the 20th. That is a Thursday, I believe it is. Thursday, a week from tomorrow. And so you don't have all that much time, but you know that in this particular market, this is one of the most important potential turning periods we've had in a very long time, even more important than the January one. So I'm advising that if you are interested in my opening call, and we've had some really nice, very nice position trades, longer term, short term. Yeah, we get stopped out we do get stopped out for tiny losses, but we try to make the gains really increase when we have good positions. So this is a perfect time because we are definitely starting to look more towards the short side than the long side at this particular point. So and check it out so you can get my service for 2 weeks free, and not only that, you'll be able to come to my webinar that all my subscribers are going to be going to. It will be archived. And that's very important. And that'll be on the MACD and the slow stochastic. Now, here's something else that I wanted to show. This is the gold chart. It's up 19.50 at 1366.50. That 200-period moving average at 1335, that has become a springboard for a move. And now what I've done, I'm going to just put in what I'm looking at. This is the leg. This is the body. We've seen this pattern repeat so many times lately. This is the neck. I am anticipating that there's going to be the neck's going to extend just a little bit more, and then we're going to get the beak, and the beak should come back and test at least the 30 level, and this is looking at the June contract, 1335. I don't know what I said, 1335. This is output. This is something in the 1335s. Now, what's important about that is that if the MACD and stochastic start to fail, you've only got a couple of days left. I've got the 120-minute chart in a potential peak F. We might have seen a little mini top right here with this breakout to 1369.20. I'm going to be watching this real closely. We don't have a signal yet, but that's what I'm watching. The weekly chart is powerful in leg B, and I've been saying that I think we will go to at least a C. Maybe C will fail, but the power of this is there should in fact be a leg D to come still. So gold is still acting very well. My monthly charts are still saying later on I'm expecting lower lows, but at this particular point there's an H to an M pattern that says the gold could even bounce towards the 1390 to 1420 area. That's a big move. So that's that. And silver right now is silver is up 33 cents at 21.14. Bonds are up 19.30 seconds at 132 and 230 seconds. You've got high-grade copper, which is down again. It's 2.94. I must tell you, this high-grade copper, let me go to the continuous contract again. Continuous contract. says, I got the wrong thing here, wrong message right there. If you don't mind, give me 1 second. I need to just go to my engineer to see that I'm not missing anything there. Yeah. Now, copper made a low this morning of 2.9080. Having a bit of a rally here from leg D, possibly a trough D. And the monthly chart did what? The monthly chart broke under, but the week is not finished. It broke under the 2.9675 low of the week of the 28th of June of last year. We'll see where it closes. There could be an H and M that goes to an H that goes to an M pattern in the weekly and even the monthly that says, hey, copper might be ready for a big move to the upside, but you know what? I don't do things like that. I'm waiting for the evidence. And right now the evidence says that was one big smash to the downside. There should be an H pattern at the least, which says you could bounce to about just over 3, and then you should come back and do a retest. And the retest is what's going to tell us further about what's going on in the general market. Look at the dollar contract here. We'll do a lot more of these currencies and commodities in the next hour. Dollar right now is trying to find some kind of a base in the 79s. So far, I don't see too much. I see a bit of a divergence between the slow stochastic and the price, but there's no reaction yet because the euro had made a peak D and it's being challenged because if it goes above 1.39143 in the euro-US dollar currency pair, that'll start leg D. Leg E in the weekly, leg E in the monthly. And so far, on a weekly basis, this action is good. Why? Because it's helping the monthly chart maintain its ability and strength to hold above the down channel, a little mini, I call it the inside track, support level, and the 9-period 1.3583 support in the monthly chart. We'll just go step by step here. No sell signals yet in the daily chart, even though it's at peak D. Why? Because the MACD is still strong. The stochastic's holding 85%. I'll be going through these in tremendous detail. You'll find it's such a help just to add this to your technical tools. You know, I always talk about my big Sears and Roebuck, the old-fashioned Sears and Roebuck toolbox, but we do add as many tools as we can, because sometimes you'll only need the plumb line or the Phillips screwdriver at a particular moment, or you might not need it for months or even years, but the moment you need it, you don't want to go to the store to buy it. Of course, I have 2 or 3 of everything because I can never find it. But you want it in your toolbox because when you do find it, it's really important. So, with that said, we've got a couple of things that we wanted to finish. The question was, would one add to the EUR-USD position? I'm going to say, at this particular point, I really would hold off a day or two. I don't think you lose anything. If it breaks above E, we'll still have to wait for a test of support. And if it breaks below 1.3826, I wouldn't want to add it. I'd say hold off for now. Be patient. I'll be right back. Basil Chapman, 877-927-6648. Great time for a call. Dow's down 12.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're new to TFNN, then you've probably heard some of our hosts and traders talk about the exciting charting program, The Art of Timing the Trade Charts. Tuesday, March 11th at 6:30 p.m., Dave White and Tom O'Brien will be hosting a live study session for anyone with a subscription to this exciting charting program. During this hour-long online workshop, Dave and Tom will lead a brief presentation along with taking questions from those that attend. Right now, we have a great deal for all new subscribers. You can sign up for the Art of Timing the Trade Charts and get your first entire month for only $1 while gaining access to this live event with Tom O'Brien and Dave White. For more information on how this exciting charting program works, you can click on the Charts button on the front page of TFNN.com today and check out some of the videos that walk you through a variety of the features included. Sign up now by taking advantage of this exciting offer for just $1 before it's too late. Visit TFNN.com today.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Basil Chapman, Tiger Technicians Hour, and I need to correct something. Wow. I've never done this before, but I remember now. It's a 30-day free subscription. For those signing up, not a subscription, but a trial basis. Usually it's 2 weeks, but we're going to go to a month. That is really unusual. I've never done that, but when we were discussing it, I'd forgotten that we were talking about it and saying that this is such an important time in the market. The MACD and stochastic is so important in my work that we really wanted people to get a feel for what's going on, and so that makes the most sense of all. I would say that this is just a perfect time to start considering it. In fact, you could even sign up a little earlier, and maybe I'm not sure if we can start getting it out before I'll find out. But this is really an important week, and next week will be a very important week as well. So let's go on. We've got the Dow now up 3.79. S&P is up 0.06, and the comp index is up 12. This, to me, is important, and I'll explain why. Let me just go to my front page of what I show my subscribers every single day. See, the VIX popped up to 1564. It's now down at 1448. That's $1.20 lower. Let me explain something. I believe that in a bear phase of any market, and I don't care whether a bear phase is just a 2-minute chart or a 2-year monthly chart or a 20-year monthly chart, to be able to pull back and hold to the downside at that particular point, there has to be some bad news or a very high high volatility index to accompany it. Why? Because to be able to sustain a move to the downside, you go back and check out markets for not years, decades, but over 70 years, 90 years, you will see that consistent down moves are invariably accompanied by bad news. You can't keep sustaining a move to the downside just purely technically. There is always something that's going on that says, oh, this report is a negative, this report is a negative, that report is a negative. I suspect, based on so many factors that are really very important, that gold is telling us something is going on. The volatility index, being reluctant to go into the 16s, is telling us there are still buyers that want to buy the dips. And until that starts to change, because we're making, so far we've done it on a very short-term basis, lower highs and lower lows, that's not good enough for me. I want to see the volatility index start to push into the 16s as you start to get news that's interpreted by the market as being negative. And then what happens is it's a periodic negativity. So it comes in every 1 or 3 days. And then all of a sudden it comes in every 1 to 2 or every day, or maybe every other day. And then out of the blue it becomes kind of a headline. And you get counter-trend bounces, but they are counter-trend to the major turn, which is meaning that the MACD has turned negative, the stochastic has turned negative, and in fact by the end of every day, every rally has been sold off and you've gone to lower lows. Not every day, but just about every day. And at this particular point, I can't put a down arrow yet, or even though everything about this says that it's probably a peak F. I have done that here, NYA.X, on the Brick Broad New York Stock Exchange, only because the pullback that we just had was just deep enough to say, even if you start a new rally, you'd have to go ABC probably. So it's kind of, I shouldn't have done that. In fact, I better take it away. It's an F. And an F, I almost always put a down arrow, but I need to stick with my rules. And my rules say it needs to have a deep close under the 9 EMA, preferably 2 out of 3 days to get the down arrow. Why? Because the down arrow implies not just a sell signal, but a sell mode, and that sell mode should take you down deep in time and price. That's number one. Number two is every once in a while, and I like to go through these in my Master Trader series, is that every once in a while we get a sharp pullback at a peak F, and then out of the blue within 4 to 5 bars, doesn't matter what time frame, it spikes up and makes a new high. Question would be, is it a G or a brand new A? A brand new A is very positive because you're going to be making higher highs and higher lows for a new buy mode. A G is very negative. So that's the one time where you have to say price has to determine my next position. So we'll be right back. Dow's up 5, S&P's unch, and I'll be back at 877-927-6648. Great day for looking at different stocks. Hey, home builders, airlines, we'll be back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Folks, we're back and we're looking at the Dow up 5, S&P's unch. Now, I had a couple of questions in the den. Yah asks about the Tesla, and Tesla right now is up 966, having made a lower low from the 265 round number high that it made on February the 26th. Let me put that down to 26.14. I'm still not used to writing 14. I don't forget to do 14, but I don't know what happened, how we got to 14 so quickly. So, all right. So Tesla's made a rectangle formation. I drawn that in a little while back. And the rectangle formation says the low of 228.45, the day on the 25th, the gap up day, 228.45. Let me type that in. 228.45. That low, let me make it very light so that it's just sitting there. There are. That low is, I wouldn't say sacrosanct, but it's really important. Why? Because at 231.11, the low this morning, that says that there could be, in this particular move that we're looking at right now, there could be a test of 228.45 to 226, somewhere around, usually about maybe 2 points or so below. But it better snap right back above 229 or 230 very quickly. Well, today didn't even get there, yesterday or today. Instead, it snapped back and it's above the 9-period moving average, and at 244.49 high of the day, it's just close to making a new recovery high above the high of yesterday of 244.60. If it goes above 244.60, yes, it's an engulfing candle. I have to tell you something. I've done a lot of work over the years with the engulfing candles, both downside and upside. And when they work, they are fabulous because they imply that the trend is changing, like a little mini doji, the exact opposite of a little mini doji candle. I also find that the success rate, I haven't done it consistently over and over, but my memory and my mind is telling me that I've just seen too many failures at critical levels to treat an engulfing candle with the respect that I find a lot of people give it. I don't give it that kind of respect. I'm very skeptical. There was an engulfing candle, very big engulfing candle, 13782, the engulfing candle of the 14th of January. Now, that's a whopper because the very next day, now, all I can say is that what happens the very next day is like a doji candle. It can tell you the direction. So if this candle is successful and Tesla closes, has to close above the candle of yesterday. In other words, it has to get above 244.16, close above it. And then tomorrow is a strong day. That is good. Now you can expect a 120-minute chart to at least do a peak A, probably a B, probably a C, and maybe even a D. But it should have a bounce that gives you an arch formation that can go to a D within the context of a bounce. Now, is it a complete trend change? I would say with the stochastic and MACD acting the way they are, it's going to need a lot more work for Tesla to really show that it has the potential not just to go and retest the 265 all-time round number high, but to break it in this particular time frame when there's a lot of pressure, battery pressure. There's a lot of pressure now with the sales because there's this whole thing with the dealerships. And, here in Natick, Massachusetts, in this very big mall, they have a store, a very successful. I don't know the rate because we're not told about the rate. I suspect it's a very successful store in that it shows the goods. Now, I think that they have many ways around it. There's no reason why Tesla couldn't have a store that does nothing but demonstrate the car with nothing to do with sales. Just to say, this is our innovation, this is what we're doing it. We can call it an experimental workshop and do things. My guess is that there's a way around it. But the actual selling, like in New Jersey, I don't know whether they're going to be able to get around it when the vote was so predominantly, totally against their having that kind of sales representation. So let's go back to the question. What is Tesla going to do? I'm going to make the suggestion here that if you're a day trader, in other words, if this is just a real short-term trade and you want to buy Tesla for a trade that has, I don't know if it has the potential to go to 242, to go to the 258, 262 level, which says, hey, I'm ready now to test the 265 round number high. All I can say is if on a technical basis, I have the stochastic, which is given a buy signal. It's at 23%. It's just gone to a buy mode. But this is the first move up. So I haven't even got a peak A yet because the bar that made the low cannot also be the high. I need another bar to say that this is now a low bar, and it's almost certainly going to be because the low today was 231.11 and the low right now is 242.52. Now, all that 244.34, 244, it's done it. This is leg A. All right, so it's leg A. It's not acting all that well in leg A. It's up 833. I'm going to suggest, personally, I wouldn't touch Tesla right now. I just think that the overnight risk, if you're going to be in it for more than a day trade, is that you could wake up tomorrow. Yes, it could be up 12 or 15 like it used to be. I got a feeling the surprises now overnight could be to the downside. But on a 120-minute chart, I've got a single leg up. I've got a start of a leg A. Nice move. The MACD is turning around. It hasn't crossed positive. So all I can say is it's a potential start for a bounce. And if you have it, You can buy 242.89 right now. I would not give it more than 1.5 to 2 points for a stop. Why? Right now, it's got to start to form a base. The 9-period moving average support is at 240. You break 240, close on a 120-minute basis on a bar. Underneath 240, call it 239.50. That's going to be a negative. This has to move right now to 245.80 to 246.30. When I say right now, I'm talking about by noon, within the next 20 minutes or so. So that's the way I'm looking at Tesla. And then if it does that, the next level of resistance will be 254.85. Hey, 254.45, 12 points higher. I'm sure that you'd be prepared to take it. Oh, wait, the gap low was 245.55. You'd be prepared to take that as well. If you went long now and it started to move 2-3 points, at least that's a good sign. Personally, I'd stay away, but that's what I'm saying to you. That if you wanted to nibble, you could nibble here, 2-point stop, and it better work, because I'd use a trading stop. I'd actually use a trading stop of 2 points. Every 2 points higher, you raise it 2 points, or just keep trading by 2 points. So that's Tesla. And what I'm looking at is that there's a real good chance that Tesla's going to be stuck between 253 if it even gets there. And if it breaks 229, that gap, you got to watch that gap, because if it goes 229, 226 will be really important. Break under 226, that gap will probably be not all the way filled, but at least partially filled, with 218.36 as the high. I'd be watching it real closely. I'm now very skeptical of Tesla. I think the sexiness is gone. I think now it's just residual determined buyers, and that's all I can say. Now, the next question I had, and it's a really good question. I'll read the question to you. Don't forget, folks, go to the front page of TFNN. Perfect time to be signing up for my trial subscription, a month of my trial subscription. And not only that, you'll be able to go to my workshop on the MACD, the moving average convergence divergence, and the slow stochastic coming up a week from Thursday. Oh, I'm really looking forward to that. It's going to be a little different to the workshop that I gave a couple of years ago. I've refined a number of things, and I've got some really important levels that I will be discussing. Now, the NYA, the question, let me go back to the question here. The question was Basil, by Rob, in the debt. This may be a dumb question. Now, I have a thing about people saying this may be a dumb question. You'll be shocked at how many other people, you go to a conference, you go somewhere, and then someone say, this might be a silly question, or you might not want to answer it, and then they ask the question, and you look around and you see like 5 or 6 people, their eyes light up saying, geez, I didn't have the guts to ask the question. I think it's important to be able to ask the question. And the question is, I've got to find it, just disappeared. It was right here. Oh, my goodness. Rob, where's that question? Rob. Okay. No, haven't found it. Had to do with the NYA. NYA. Okay. There we are. Basil, this may be a dumb question. I have an up arrow on the New York Stock Exchange, the NYSE. The way I get it, and I don't know how Rob gets it, but I go $NYA.X. That's was TradeStation. And look what happened. Now, I'm just going to move that away. I got a low bar on the 3rd of February at 97.32. 97.32. And that low bar was right just a tad above the 200-period exponential moving average. The very next day, remember we were just looking at Apple? The very next day, there was a gap up from that 9732 low and a 9741 close, just 9 points higher. And it opens at 9779. The following day, it opens nicely, but then has a sudden slide to the downside. Let's make this even bigger. This is the daily chart right here. And what does it do? It goes down to 9738. Well, 9738 is a higher low bar, and that means that the low of 9732 on the 2nd was in fact the low. Now the question is, I have an up arrow on the New York Stock Exchange. Let me just move that moved because I expanded the chart right there. And he says, I have an up arrow on the New York Stock Exchange on February the 3rd. That's the same as me. And a peak A on February the 4th. No. Now, it's a trough D. So I need to just explain this. On the way down, we call them troughs, nothing to do with peaks. They are called troughs. And on the way up, those little peaks are called peaks. And I use a capital P on the way up and a lowercase t on the way down. Why? Because the letters are lowercase, because it tells you that's a down mode. That tells you it's an up mode. All right? So it's a trough D. The MACD then started to turn around and then very sharply broke above 20%. Sorry, the stochastic. And then the MACD crossed positive on the 11th of February, and that confirmed a very powerful move to the upside. Now, look at this. That level of 9738 says you have not yet made a peak. So I don't even have a leg A. That is my first leg A. The very next bar, the bar of the 6th of February, starts leg A. But it's called the floating letter. And that floats to the next bar because it's higher. And that next higher bar on the 7th goes to 10,061. That's leg A. The very next day you make, I keep hitting the wrong thing. You make a lower high bar of 10,052. And that makes peak A. The very next day, on the 11th, you go past peak A at 10,061.33. The moment you go to 10,061.34, what do you get? Leg B. And it's a floating leg B all the way until it gets to the 19th of February where it makes a peak B. Now, I'm going to ask Rob in the den. Rob. Yes, I see you. Thank you for repeating the question. Rob, did I just answer your question, both about the troughs and about the leg up that starts the leg that can make a peak? So on the way down, I don't use the term peak at all because they are legs to the downside, lowercase leg, and a lowercase letter, and they're called troughs when they turn around. On the way up, it's called a peak, a leg up and a peak with a capital P. So all I need is a yes. If any part of that you didn't get, I'll go over it again. So let's do a couple of things here. Well, wondered about Feb as being higher than Feb 5. Oh. Look, Feb 4 is lower than the low, but it isn't higher than the high. To start a leg up on the 4th of February, the price would have to go above 9970.29. But the very next bar, if the very next bar on the 5th was above 9828.97, that would start leg A. That's why the bar of the 6th becomes leg A. Now, that's a great question, and I go through that in great detail in my CD introducing the Chapman Wave methodology. And in fact, we've got a break coming up. I'm going to put that on. I'm going to set it up, and I'll show you exactly how that works. It's a really good question. Folks, don't forget, go to the front page of TFNN. Check out how you can get my service for a month free. I've never done that. And that's number one. And number two is you'll be able to come to my live workshop on the 20th of March.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of of shorting and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks, we're back, and I'm going to answer 2 questions just real quick here. During the break, I was asked about PANW. I've got an alternate account as the peak in Palo Alto Networks, Inc. Just a fantastic chart formation, continues to hold very well. 79.99 on the 24th of Feb makes the U formation really important. If it breaks under 71.92, if it closes under 71.92 in the next 2-3 days, very negative. If it breaks above 79.56, it's going to test the 79.99 high. That I will have to call a leg. It's AB. A very interesting ABC. Whoa, this is a Chapman wave overlapping waveform, and that should take it to a strong D. If it takes out 79.99, is a good chance it just goes right into the 80.70, 81. Sorry, 81.70 area very quickly. I'm going to watch this one closely because it's actually one that I've liked for a long time, weekly in leg C. Now, the question that I had was, in the Chapman wave, at the bottoms, how do you identify the bottoms? What do you do? So look at this chart right here. In this particular chart, I'm going to go to 80, what did I say? 81. So I go to 81 first, 81 right here. The trough. That's the opposite of a peak. Technically, this is from my CD introducing the Chapman wave methodology. You only can get it at TFNN. Technically, a trough is formed by a higher low bar. Even a higher low bar, as little as 0.01, creates a trough. A trough can look like a valley. It is the opposite of a peak, indicating a trend change, however slight or strong. So right there you get the trough. And then on page slide 85, this is out of 276 slides, this is the way you do it. And in fact, in the next hour, I'll go a little bit more into detail. I see that we're just about to wrap up this particular segment of the show. So I'm not sure, Rob, I hope you can say, or it'll be archived, but I'm going to explain it to you and I'll show you the charts. This is slide 85 of my CD introducing the Chapman Wave methodology. The 1 penny above starts the new leg up. Otherwise, it's called the floating ladder until it makes the peak. But you really want you to know what would constitute your first peak from a bottom trough that has turned around. And that's the question that I will answer. It needs a little bit more time. I don't want to rush through it right now, other than to say you need to establish a low bar by having that V-shaped pattern form, because you've made a slightly higher low bar, at least a slightly higher low bar the following bar. That makes the turn, as in PA and W. The low of the 3rd of March at 66.38 had a low the next day of 69.26. Well, that creates a little V-shaped bottom. So I could put an A right there. I have to make a peak, and there it is, A. And there's the next one, B, because it's 1 penny, and there's C. Okay? So let me just do this because we're about to wrap up. I'm waiting to get a sell signal indication in the Dow. What would give it? The sell signal would be, even though we're actually short, would be a close below. Right here, the 9-period moving average is at around about 16,340. I want to see a close preferably underneath 16,300. That would say to me there's a real good chance that you've got yourself a peak F. But for it to get a down arrow, technically, I want the stochastic to be under 80%. It's at 79.88. And I need to see the MACD cross negatively. Until then, there's enough residual strength to say you could bounce. So I need a couple of factors. And if I get 2 out of 3 sessions over the next 4 days where the price is closed under the 9 EMA, that will say the 9-period moving average is going to start turning down sharply. The MACD will probably cross negative. Stochastic will be somewhere around 73%, and I'm going to put in a down arrow right there at a potential peak F. Until then, I can just say I've anticipated it based on my work on the 120-minute chart, which made a beautiful peak D and needs to break under 16,217 to really push the daily into a sell mode. I'll be right back for Larry's show. Stay tuned, and otherwise have a great day.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.